Thank you very much. I'd like to talk to you a little bit about something really exciting that happened in my area of expertise. But to do this, I kind of have to go back and kind of have to take stock of where we are in this global evolution known as the blockchain journey. So these days, the word blockchain has become one of these words that doesn't require an article. We don't talk about a blockchain, the blockchain. What we see instead is if you're walking around Manhattan, especially in the lower parts, you'll see two bankers walk side by side, and one of them will turn to the other and say, "What's your strategy for blockchain?" So it's one of these words that's in the same category as God. Okay, it doesn't have an article. And lots and lots of money has gone into the space, about $8 billion of VC funding, about $20 billion of crowd funding. And that's amazing. And the cryptocurrency space, of course, as you all know, is worth more than about $100 billion. And one of the interesting things I've seen firsthand is darknet market operators sitting at the same table discussing technology with stolid old gentlemen from the Bank of England. So, and of course, there's underlying all of this is a social movement. And if you go to, say, for example, YouTube, and you look at a simple indicator of popular acceptance, the number of songs written about Bitcoin, it's just far in excess of the number of songs written about Facebook, about Google, about even free software. So this thing really captures people's imagination. But what is it all about? What's this underlying thing that's happening here that's really getting everybody excited? And I want to give you my techie's view of what's going on with a bit of commentary on sort of the evolution that we've seen. So what is it about? It's not about an append-only log. We all know how to append to the end of a log. If I knew that there was so much excitement about a simple linear data structure, I would have given you guys an append-only log many, many years ago. We have lots of different techniques for achieving this. This is not what the excitement is about. And in fact, people are not really excited about blockchains anymore. They're doing graphs. All the cool kids are working on directed acyclic graphs. It's not about proof of work. That's sort of a nice catchphrase, but if anybody shows up and says, "I've got proof of X for you," run the other way. Those people don't understand what this is about. These proof of X type mechanisms are Sybil control mechanisms. They're not the enabler for Bitcoin. It's just one of the things that Bitcoin used. The core contribution that Satoshi made was a consensus protocol, not a Sybil control mechanism. What this is really about is a coming-of-age story where we switch from client-server platforms to peer-to-peer Byzantine fault-tolerant platforms. We can now run in a trustless fashion things that we did not know how to run before. And this is preceded by many decades of research on Byzantine fault tolerance. And I want to walk over that with you to try to put it all into context and tell you about the latest, greatest breakthrough in this space. So, where are we in this space? Well, it's been 10 years of Bitcoin. And there has been an amazing dream sold to the masses. This dream is really compelling. It's a dream of disintermediation, of equalizing the playing field, getting rid of the incumbents, getting rid of those people who sit on top of a bridge where they've made sure that all the other bridges have been torn down. So you have to cross their bridge, and you have to pay them a toll. This is an amazing thing. It resonates with everybody. Surely resonates with me. It's an extinction-level event for many companies. And it's a great opportunity for many startups. And the bar is actually very low. If we fail at everything we are trying to do in this room, but succeed only in, say, for example, providing a better API to the banking system than what my bank provides to me. This is a very low bar. My bank is an upstate New York bank. It's actually terrible. It's not very hard to outdo them. But if we could manage to do just that, we will have succeeded. Or if we could provide a trustworthy exchange, we will have succeeded. These are areas where we could be better than what Wall Street has. This game of catch-up, where Bitcoiners go to the SEC and they say, "We'd like to have an ETF," and the SEC says, "No, you're not good enough," is a funny game. We can be better than them. We don't have to be behind them. So this is fascinating. It's an amazing opportunity. But we won't be able to grab this opportunity with the technology we have. There are 4 reasons for this. First one is of scale. The technology we have today just cannot scale. And I know this upsets the maximalists in the room, but even the Bitcoin maximalists concede that their tech doesn't scale. That's why they're going over to other layers to try to get that scale that everybody obviously needs. It's not secure. Okay? There are thefts all the time. Everybody who builds a coin externalizes the problem of security. They rely on the operating system vendors to worry about security, and we know how good those guys are. They've had many decades, and it's just not getting better. The third problem is performance. These coins don't have the performance we need to take over functionality from incumbent systems. Governance, of course, is a real big problem, and user experience is a huge problem. So if I look at adoption, it's actually a very dismal story. Nouriel Roubini was, in fact, making a bunch of points that were exactly right. So this is Bitcoin acceptance among top 500 e-commerce merchants. Do you see a trend? I see a trend. It's a dismal trend. It ain't going anywhere. And if I look at what's happening with the narrative, I see a terrible, terrible story. So it starts out as digital cash. It's very compelling. It then starts into a hedge against the financial system collapsing. And then it sort of becomes a replacement payment system, then becomes a sort of a fundraising system, and ultimately turns into a store of value. Now, it's a store of value that you're not supposed to use. You know what's a store of value that you're not supposed to use? It's my old, teenage stamp collection. It's only my teenage friends who thought there was any value in it. Or my grandmother's china collection. Her friends think it's very valuable, but really, it's never used. Or a bug collection. In fact, that's actually quite apt for smart contract systems. So, okay. So there are a bunch of things that we've seen, the narratives that have failed. Banking for the unbanked, we've seen that the current technology isn't good for this. Right? So experience in Africa and India shows that SMS systems are far cheaper than what Bitcoin offers. And the unbanked becomes a euphemism for first world unbanked. And we know exactly what that is. It also has a different euphemism, censorship resistance, which is really enabling illegal activities. And these are not societally good. These are not the kinds of things that you go to your parents about and say, hey, I'm really excited to be doing this. This is not good for us, and it's only going to bring bad kind of attention to us. There's another narrative, become part of the global system fabric. Well, okay, I want to become part of the global system fabric, but can the base layer even accommodate large numbers of players? I'll show you numbers from a recent study just about how dismal that base layer is. Build world computer. Well, okay, let's build a world computer. Oh, it turns out it computes at 15 transactions per second, and it cannot capture the value of things built on top, putting everything at risk. So this is a pretty sort of not a good state of affairs. And in fact, what we end up having is decentralization theater. If you look at the state of who produces Bitcoin and Ethereum blocks, right? This all-crucial data structure called the blockchain, it turns out that there are only 19 pools that are responsible for the vast majority, 99.99% of the blocks in Bitcoin come from 19 entities. That's decentralization for you. For Ethereum, it's 11 at the moment. And after Ethereum 2.0, it's going to go to about 60-something. So why is this? Well, it's because what we've got right now is the best way we knew how to build decentralized systems. This is the best we could have done in these distributed systems. I want to talk a little bit about the tech behind it, about why the limits are there the way they are, about what's happening with blockchain 2.0, which is actually a regression from where we are today to older technologies. And then I want to show you a new system that's actually much, much better than this. One crucial thing to realize is that with proof-of-work systems, the hardware that's being used is a kind of stake. It's there to ensure that you don't lie about your identity. You don't come in and say, hey, I'm not just one person, but I'm a million people. So proof of work is there to make sure that, well, if you're going to say that you're a million people, do a million people's job. But of course, what really ends up happening is that some people are in a privileged position. They know how to manufacture chips in China. They have access to really cheap electricity, and they become the dominant player. And economies of scale guarantee that there will be such players, that there will be centralization inherent to any proof-of-work system. What we had with Bitcoin was a great proof of concept. It showed to us what's possible. But it is not an inherently decentralized system. It's quite the opposite. And in fact, the amount of energy consumed by these systems is immense. If you look at, for example, the amount of energy going into mining, it's about 1 Austria. Maybe it's hard to visualize. It's about 2 Denmarks, about 3 Irelands. Okay, so multiple nuclear power plants are essentially going into building these blockchains. And the energy spent doesn't provide value to the coins. Okay, so it's not like, oh, I spent $2,000 making this coin, therefore it should be worth at least $2,000. It doesn't work that way. Okay? It's valuable to the extent that somebody wants to buy it off of you because it serves a function. And so in essence, these proof-of-work systems leak value out of the ecosystem by converting it into income for the energy companies. So what's happening with blockchain 2.0? Well, I will show you in a second exactly what's happening at the protocol layer. In essence, what's going on is people are going into different designs, sort of more green designs, more sustainable designs, with certain well-known, well-understood problems. One of the big problems still is that they cannot scale either. Number of producers, number of participants in the system goes up from maybe 19 or 11 to a few dozen, but not more than that. And they cannot evolve. They don't have governance mechanisms except for, say, Tezos and a couple of others. There's generally no governance mechanism being built into these systems. And they cannot capture value. So anything you build on top, they're opaque to, and they don't know how to get at that value. And of course, this gives rise to an explosion. When people come in and say, hey, I've got this side chain, I've got this blockchain, and so on and so forth. At the moment, there is not even a good definition of what a side chain is, and yet there has been so much noise made about it. We're at a very dismal point technologically. Can we do better? And I would like to posit to you that yes, we can do better with the aid of something new that happened about a year ago. And to put it in context, let me roll the clock back all the way to 1970s and look at the consensus problem. This is a well-known problem. It wasn't introduced by Satoshi Nakamoto. Everybody knew about this. It's been worked on for many, many, many years. Satoshi did come in 2009 with a new approach. But before him, we had 30 years of what is known as classical consensus protocols, also known as Byzantine fault-tolerant systems research. The people who started this field, who provided the framework, are both Turing Award winners, Leslie Lamport and Barbara Liskov. And they had some amazing approaches and many, many protocols that have been proposed in this world. And they all have approximately the same features. They all involve all-to-all communication. So if you're going to have 10 people in your system, there's going to be about 100 messages. If you have 1,000 people in your system, you have about 1 million messages. And you can see that this thing does not scale. N squared is a terrible, terrible scaling property. And the way these things work is very, very simple. Okay? Imagine that you want to achieve consensus in a closed room, and here we are, the British Parliament, and we're going to ask the question, or I want to make the decision that we're going to exit the EU. So what I do is I write to a large portion of the Parliament, about 67%, and then when it's time to read, you read from a large portion of the Parliament, about 67%. And that, of course, ensures that we have some intersection, about 34%. So 33% of the Parliament, this red section, could be confused about what happened, could flip and flop on you, could change their minds. They could say, yes, exit one day, and then the next day change their minds and say, no, don't exit. But because of the size of that intersection, there's that one guy in that middle right there, and he's going to say, no, 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 remember we made that decision to exit, we really made it. So all of these protocols, maybe at least a few hundred, maybe thousands of papers written on this topic, come down to reasoning like this. And in fact, until very recently, you could be an expert in Byzantine fault-tolerant systems simply by mastering how these proofs are constructed. These are proofs about intersection sizes and how to ensure that there's always one correct node and so forth. But the bottom line of all these protocols is they work only when everyone agrees about who's in the room. And that makes them fragile. We had these protocols since the 70s. When the Byzantine generals problem was introduced, there was already a solution for it. Satoshi did not solve it. We have many solutions to this problem. What Satoshi did do is he looked at these protocols and said, look, these are all fragile. I cannot use them in an open, permissionless system. So he came up with his mining approach. And I'm not going to go over how Bitcoin works. You all know how this works. Essentially, you draw a lottery and you say, okay, so that person over there is the leader, and he tells us what happened. So that's okay, but it has all of the downsides that I talked about leaking value out of this ecosystem. So where does that leave us? Well, it leaves us in a position where if you don't like mining, if you don't like what Nakamoto consensus gives you, you are left with having to regress to already discarded ideas, to things that Satoshi stepped around. And if you talk to people who are working on this, they will freely tell you that in blockchain 2.0, they might very well have some safety violations on occasion. They might very well have to undo things that happened in the network because the network is fragile. But last May, there was a PDF dropped that contained a description of what I think is an elegant algorithm for achieving consensus at large scale. It's called Avalanche. And the core, so the features of this is it gives you very, very quick finality. I'm sure there have been many people who've strolled through here and talked about, oh, quick finality, high throughput, this and that. But this is different. The way it works is different. I'll tell you how it works. And I hope you'll be able to see in like 1 minute or 3 minutes or so exactly how it works because it's easy to understand. So it's quick finality, very high throughput, and one of the crucial features is it allows lots of people to participate in the protocol. It's inspired by, for those of you who know gossip protocols, it's inspired by gossip networks. And the idea is to create a metastable system, a system that is not at rest, a system that is sort of toppling, or sort of dancing around, but will come to rest only in a state where it has made a solid, irreversible decision. Let me tell you and show you how this works. Imagine that we're in a giant stadium. This is the Maracaibo Stadium in Brazil. I think it's about 100,000 people. So it's a giant, enormous stadium, and we'd like to achieve consensus. Now, if you wanted to use a classical system, everybody would have to talk to everybody. 100,000 squared is a huge number of messages. It won't work. If you wanted to do proof of work, okay, you could do proof of work, but that's terrible. If we were to use Avalanche, it's actually fairly simple. So you and I are in the system, in the network. We don't know everybody. We don't know everybody in the stadium. I know a bunch of people. You know a bunch of people, but we don't necessarily know the exact same people. So it's going to be robust. Okay, so what do? Well, everybody looks around, picks a very small number of other people, and says, hey, over there, you, what color, so we're going to make a decision between red versus blue. What color do you guys prefer? Just 5 people, okay? And so you ask the query, you get back answers, and in this case, the answers that came back were red, red, blue, red, blue. So what does that mean? Well, from my limited perspective, it looks like the network is tending towards red. So I turn red myself. And my friend over there does the same thing. And in that case, okay, I guess they turn red as well. You can see that the worst thing that can happen is that the network is divided 50-50. And you can see that if we all simultaneously sample at random, at the end of that round, we're not going to be exactly at the middle. It's incredibly unlikely. If we are, I'll tell you what happens next. But it's incredibly unlikely. More than likely, I will sample a bunch of reds, and you will sample a bunch of reds, and you will sample a bunch of blues, and so on and so forth. And we will have slightly more reds than blues, or vice versa, depending on random variation. So at the end of the first round, we'll probably have about 51% of one color, 49% of the other color. And if that's the case, on the second round, we are more likely to go in that direction than we would go in the opposite direction. So if we have 51% red, next round takes us to 53% red. And then the next round takes us to 56% red. And then the next one takes us to the next one, etc. We might revert. A particular node might sample blue in the middle and go back and then go to red again and so forth. But math shows that after a very modest number of rounds, the entire network will assume the same color. So if there's a double spend in the network, Alice pays Bob versus Alice pays Charlie, the network will pick one and stick to it. And if afterwards you want to introduce a triple spend, Alice wants to pay David, the network will say, no, we picked, Alice paid Bob. That was the decision we made. You cannot revert it. And the amazing thing is, everybody participates in this protocol without having to mine. The protocol itself is super efficient. It requires a very small number of messages. So again, the math shows that for a network of size 10,000 nodes, where people are sampling each other at like just 5 samples per round, you only need about 15 to 17 rounds or so. So that's amazing, right? So it's like 85 messages gets you to consensus. And you don't have to mine, you don't need Jihanwoo, and you don't need any kind of special equipment to participate in this. And there's another thing that I didn't talk about here because of the complexity and the amount of time, but the network is actually building a graph. So one of the reasons why I'm going to be able to claim really high performance numbers is because simultaneously somebody could be growing one set of decisions while another person is growing another set of independent decisions in parallel, but in concert. So there's natural sharding inside the network. This gives us strong immutability. Immutability is really a function of how many people are going to get subpoenas at the same time. And believe it or not, law enforcement is quite capable of sending 19 subpoenas at the same time. This is not a problem for them. Okay? So Bitcoin was 19, Ethereum was 11, EOS is 21, and Avalanche can allow tens of thousands to millions of direct participants. And one of the odd features of this protocol is that it can tolerate a large fraction of Byzantine participants. So it can guarantee safety, but not liveness, but safety, for even more than 51% of Byzantine actors. So that's a pretty nice situation to be in. And the security properties degrade gracefully as more Byzantine nodes are added. So if you parameterize your network thinking that there will be no more than, let's say, 30% Byzantine actors, and so what you end up promising to your users is, well, it's going to take 10,000 years before there is a safety problem. And suppose you screwed up. Suppose there's a 35% attack on your system. Well, the system doesn't just croak, doesn't just keel over and die. What happens is the safety guarantee you gave ends up changing. So the safety violation will not be 10,000 years away. It might be 2,000 years away. Okay? So that's a very nice, graceful way of trading off the very important safety versus liveness trade-off in a distributed system. I mentioned that the system is robust. It can handle imprecision in membership. So people don't have to agree about who's in the network. It's green. There's no mining. It's many orders of magnitude more efficient than Nakamoto. And it's a quiescent protocol. If there's no decision to be made, we kind of sit here. We don't have to send messages. We don't have to mine. We don't have to consume any electricity. And it's egalitarian. Everybody is on an equal footing. Okay? So there's no special class known as the miner class whose desires might be at odds with the user class. So this entire fight within the Bitcoin community against their own miners is sort of heart-wrenchingly sad to watch. So this completely fixes that by creating an equal playing field. And of course, you can just run this on small devices. If you want to really run this on a Raspberry Pi, you could. If you want to run it on a phone, you totally could. So, and one of the interesting other features that pops out of this is that the operation of the network lends itself to natural governance. The system is essentially a crowd oracle. You're asking questions of the crowd, and the crowd will go with the decision if they prefer to do so. So one of the things you can do in Avalanche is put up for governance those parameters that other systems would have baked in. For example, Satoshi Nakamoto had to bake in the emissions curve for his tokens. On day one, all of the token emissions was fixed. Okay? So he got it right some of the time. Some of the time, he actually mints far fewer tokens than there is demand, so the price goes to the moon. Other times, he mints many, many more. At the moment, he's actually minting many more than he should, if you ask me. If you look at other coins, you can see this more starkly. So Zcash is using the same curve. I think Zcash is minting far many more coins than it should. Ethereum is minting many more coins than it should. And you can't change it, right? So once you've committed to it, you've committed to it. And your miners have made capital investments based on what you promised to them. You can't really change it easily at all. But what you can do with Avalanche is somebody could say, anybody could say, in essence, hey, we're minting too fast. We need some price support. We should dial back the minting rate. Or vice versa. We should mint more to entice people to get into the system, to stake, to participate, to create more decentralization. So this is going to be open for governance, and it should be open for governance. We should be the ones in charge, not somebody else. There's no point in trying to break away from the financial system only to create another universe where miners are in charge, or devs are in charge, or the operator of an internet forum is in charge. Okay, so essentially there are lots of interesting things to be built on top. I want to just sort of sketch out how a token could be built, because we're building a token on top of this. I want to tell you a little bit about its features. So it's called AVA, and it's based on the Avalanche protocol, and it uses its own token for a payment trail. Now, crucial thing, of course, is this kind of a protocol could be used anywhere. You could couple it with proof of work, okay? But it makes much more sense to couple it with staking. So stake is superior to mining rigs. It has no carbon emissions. There's no leak of value out of the system. And one of the crucial features about stake is if somebody uses their stake to attack your system, then their stake is completely destroyed. They can't then take it and go somewhere else. Right? When we saw the exact opposite of this with proof of work, where Bitcoin Cash and Bitcoin Satoshi's Vision, BSV, were attacking each other, and they could do so using their mining rigs. Right? You could have one person use their mining rigs to attack this coin, and then use them, take them back, and use them again on their own coin. That is not possible with stake, and that's one of the amazing features of proof of stake. So staking gives you rewards, it just gives you rewards. So we envision using AVA as a tokenization platform, where you could issue many kinds of different tokens on top, and many kinds of scripting languages. We were the first group to notice that everybody in this universe is essentially copying each other and copying Satoshi Nakamoto, and just tweaking parameters. But there is no need for there to be just one coin and one scripting language. In AVA, we're going to be supporting multiple scripting languages. So if you want to issue a coin, let's say to represent, I don't know, frequent flyer miles or real estate or what have you, gold on a blockchain, as people used to do for a little bit, then you can do so, and you can support any scripting language on top. You can say, hey, I like Zcash's zero-knowledge proofs. I would like to couple it with Bitcoin's scripting language. That's perfectly fine to do. Now, every large company, even as we speak, is carrying out proof-of-concept efforts based on permissioned blockchains. Okay, this is what big companies do. All of these proof of concepts will succeed, and we will not see any of them deployed on mission-critical paths. Why? Because they're typically dealing with permission chains, and permission chains are fragile. Everybody knows this. This is not too much of a prediction, because if I look back, I know that there have been hundreds of POCs. Not one of them has been deployed on mission-critical paths, except WhopperCoin, by the way, and WhopperCoin is a special exception, but other than which, where the stakes were fairly low. The protocols are too fragile, and it's just not appropriate. And yet, you could actually deploy any kind of a token on AVA with great ease, because you're actually going to be using the same robust, big, open platform. AVA supports smart contracts. It provides an execution platform for arbitrary code, and its support for multiple scripting languages means that you can have smart contracts written or compiled down to EVM or WASM or other languages. And the current plans call for throughput on the order of thousands of transactions, or 1,000x higher than what we have now, about 10,000 TPS. And one of the crucial features that the AVA platform provides, that I'm not going to be able to go into because of reasons of time, is privacy for the smart contracts. That is, the internal state of a contract can be made private to a node and not leaked out to the entirety of the network participating in the protocol. So where does that leave us? Well, there is a new tool in our arsenal for building the dream. This new particular consensus protocol is unlike everything we've seen before. Now, one of the things that every academic knows is how to create yet another novelty, right? Somebody invents a hat. Well, you put the hat on your head. You can't get a paper out of just putting the hat on your head. Well, you put a feather on it. Okay, well, now you have a slightly novel kind of hat. Okay, so now we're seeing that in blockchain 2.0. We're seeing hybridized protocols. We're seeing proof of XYZ for various creative definitions of X, Y, and Z. But in Avalanche, it's not one of those. It's completely different. Nobody before the paper was dropped was actually thinking of achieving consensus using that technique. and it's the proofs or the guarantees that the protocol provides and its mode of operation enable a completely different style of service. And of course, going up the stack, we're rethinking the entirety of the rest of the stack, the API it offers to applications on top. And one observation that everybody should be able to see by now is that the entire space either rises together or sinks together. There is no room for maximalism. That only serves to divide us and to have the whole space not be able to achieve its potential. So we're very much looking forward to working with anybody and everybody who wants to adopt either AVA or the Avalanche protocol and build exciting things on top. Thank you very much.